Good morning, guys. Welcome into another live stream here with the Everyday Growth Advisors. Can you hear me now? I think I had my mic selected somewhere else, and then I was talking to myself for a hot minute, and that was very enlightening. Welcome in on this Monday morning. I hope you're doing good. You know, you're well rested. You're prepared for the week that's coming. We obviously last week didn't really get to do a proper live stream because of internet that was pretty bad, but this week we're back, and you know, I'll be here trying to be more consistent with these things. I would love to hear from you guys, you know, what you actually want to see on these live streams. I'm thinking of changing up the format a little bit, so if you're here, I would love to hear from you. You know, we have a certain format that we've been using, but I'm down to you know, shake things up. I want to maybe incorporate a couple of different like meditation sessions, if we can start off with that. Have a little like session of mindfulness, observing our thoughts, you know, making sure that we are not falling in the pitfalls of the psychological traps that we are so fond of. And it's just like a little calming session before you start your trading, right? I think that might be kind of fun, might be, you know, a great way to kind of calm your chatter in your head before you start. And then also I have an idea to maybe throw in some fundamental research some of the days based on what you guys choose. So if you're here today and maybe you're interested in know the fundamentals of a specific stock, why don't you throw it down in the chat? And maybe I'm going to pick one of them to do the next time. I'd appreciate that. Also, make sure you smash the like button, just as always. And yeah, let's get this started. So, I mean, going on from, you know, where we set out the path, where we were coming down from here, we already, for entertainment's purpose, drew this path which we predicted the market would take. We knew that 5250 to 5275 was a key level for liquidity. Another key level was below here, 5200 to 5000, you know, to 5220-ish was another liquidity area, right? You can see. And we pushed both against both, right? We started rejecting, and then we had a massive rip rally the moment we touched the 23.6 extension retracement here, sorry. And this was very interesting, right? I mean, based on my previous live stream, which was last Friday, not last Friday, but the Friday before that, we had already set this path out in motion and to see exactly how it's playing out. It's really weird. Now, I don't expect the market to rip higher than 5350 for the time being. I think that this was such a straw drawdown here that people are rethinking positioning themselves. And there are a couple of different things that I want to go through with you guys today. There's really, really important information that you guys should know. Now, very simply put, let's kind of go through step by step here. So let's look at, first of all, the Fed rate chances. Okay, now this has been most of what the market's been focusing on. So I really don't think there's a reason to concentrate on too many different things for the macro. This is ultimately what it boils down to. Money easy to borrow, then the market goes and gets happy on hoppy juice. Market difficult to borrow, the money difficult to borrow, then market gets sad, throws a fit, becomes angry, confused, and now is one of those times when the market's confused, angry, and sad at the same time, right? As you would have known, a couple of days back, we posted the sad face, hand on face indicator. You guys ever heard of that one? Did I post it here? I feel like I posted it on a trading floor. But, you know, it's that one image where you always have the guy with his hand on his head and he's really sad, right? Our trading floor goes by very fast. So, but when you have that indicator come out, it's very, very telling that the market's approaching kind of a bottom. And while I think that the bottom may be short-lived, you can see that for the June meeting that's coming up on June 12th, 95% chance that rates are staying the same. And then by July, that becomes an 83% chance, okay? By September, the market's completely undecided. It could be a rate cut, it could be a rate hike. It's 47% for a rate cut, 45% for a rate hike. And finally, in November, the market's also undecided with 46%, 32%, 18%. So the bond market, by the way, how do we come up with these numbers? Is not out of thin air, guys, and this is not like someone's opinion. These numbers are calculated based on the treasury sales that are going on. Okay, so for bonds, okay, that's how we know what's the chances. The market's pricing in this data, okay, in terms of basis points. So as I wrote here in our Discord, which by the way is free to join, this was posted on the free channel, the public trading channel, not the trading room, right? And I said that the September rate cut expectations all the way to November, and I would guess December too, are probably going to be pushed out. So every single dip, which is going to be buyable once we enter the first rate cut expectation. So this is mainly because the market is expecting a December cut at this moment, right? And will likely form some price turbulence. And these pullbacks here will look very minimal yet volatile in the future. So expect some small waves up and down. And I feel that this is more of a consolidation of emotions because traders themselves are undecided about what's about to happen, right? So Now, I want to go on one thesis that you can actually take advantage of today as a investor, which is the software sector. Okay, and it's very interesting because this sector has been hit for like very, very stupid reasons. Let me give you an example. A company like Snow, right, is trading at very low prices here compared historically, right? And if you're looking for an entry into, you know, the software space, like in terms of shares, this is a great buy here, right? If you just look at it, and you just reset this chart, right? And you can see that this specific area here has been previous very strong buying. Here, even here. And now we're starting to enter that area again. The risk to reward ratio here is pretty awesome. If it gets further down, all the way down into 123 or so, right? At 123, I could take a risk off scenario at around $95, let's say, and have a decent amount of upside and the 1:3 risk to reward ratio play, which is nice, right? And all we need to do is wait for a confirmation bounce, which you have to practice a lot of prudence and patience to catch, right? So I'm putting this out there. There's this setup, right? There's D-Dog, which has now broken back into its long range here after consolidating above for a really long time. This one is quite shocking, right? And then you have CrowdStrike, which came down very slightly ever so after a monster rally. You have DocuSign, which is breaking below a pennant here. We know how this setup goes. This is a great setup, right, to play. So there are a handful of setups here that are very, very helpful, okay? And I think, you know, for example, long-term investment. You guys ever heard of this business? Viva Systems, great stock to buy for long-term, okay? Go look at the balance sheet. This is an excellent buy, right? Even Salesforce, CRM. Look at this one. It's undervalued at this price. Okay, it dropped more than, I don't know what, 20%, right, on this day. It was nuts. So a lot of these are getting sold off for no reason. And if you're looking for long-term investments, Viva is one of them. This is a good one. And then CRM is the other one. Okay, so that's your software sector covered. These are long-term investments. I wouldn't want to like spend too much time trying to predict them in the short run. Okay, now let's talk about China a little bit. It's pulled back significantly, but it hasn't really given us a breakout or any sign that this is reversing just yet. Okay, you have to be extremely careful because with the Hang Seng Index, we need to break clearly above this to validate that this is a new demand level, and then we can go higher. Okay. And that means that setups like Baba, which look so attractive right now, aren't actual setups until they give us a confirmation. Okay, so this is more of like a, hey, be careful, there's not enough evidence here that the market has turned a corner, right? So be careful with China. Don't go unusually long, even though there is a lot of chase for the potential of it. Okay. And with the SPX, I firmly believe that we are likely to get a potential rejection of some kind, either at 530 535 on SPY, 535 on SPY, and 5350 on SPX, right? So we could go all the way up here, reject, or all the way up here, reject, okay? And then come back down to retest this either way, okay? So I'm thinking that might happen. If we break further up higher, I will be quite surprised. Okay, now, I know there are quite a few things that we can discuss as plays, so let's look at them really quickly. First things first, NASDAQ, it's going to take a similar pathway to SPX. Quick update on IWM, it's still ranging. The 209 level is a important level, so be aware of that. Okay. 10-year yields came up briefly last week and back down again below the trend. So safe to say that this is now supporting the bullish thesis more. And the dollar index bouncing on the trend line, still not broken down yet. If it breaks down, that's going to support the bullish movement. But if not, it's going to start bouncing and then heading higher, and that's going to cause the market to spook. VIX normalized level between 11 and 14 is very low volatility, so this is still okay. And let's look at GameStop this morning, right? It's up 71%. Okay. Now, I'm of the view that whenever this kind of stuff happens, right, I'm not really interested in trading GameStop. I'm more interested in trading Robinhood, and I'm more interested in trading Coinbase. Okay? Because when people are trying to dig for gold, you don't want to be digging for gold. You want to be selling the shovel. The same concept I like to use for things like Robinhood and Coinbase, because when everyone's trying to trade GameStop, the exchanges are the ones that will benefit. I know Coinbase is not linked in terms of GameStop, but it is linked in terms of the sympathy for being a gambling den. Okay, which I know I'm being a very loosey-goosey term right now, but you get what I'm saying. When people are all trying to gamble, and they're like, oh man, this is gonna rip, they will try to buy anything to gamble. Crypto will get in the mix too, okay? And you can see Bitcoin's up literally 69,000, right? Attempting to break out once again. And even Ethereum is kind of breaking out here. So you can see that when the market gets like finicky about these things and they want to start gambling, it's, you know, everything starts to rip. Now, yeah, that's all the opportunities I have for you guys in terms of sector rotations, in terms of things that are valuable. But if you have some questions, or if you want me to break down a specific chart, go ahead and drop it in the comment section right now, the chat, and I'll get to it. And yeah, that's kind of all I have for you guys. I have a couple more setups like McDonald's. This one's pretty nice as well. This is a great weekly bounce off the long-term trend line if you look at it, right? There's also Starbucks is a similar setup like this. CVS, okay, let's have a look. I think last week we saw unusual flow on CVS. Oh yeah, this is a great one also, right? Beautiful. Indeed, very beautiful. I like this setup. This is nice. So I would do here. And that's your demand. Let's see here. It's another strong supply there. That's your supply zone. Oh, it's a bit too red. Okay. So you got these two. Go down in the 4 hour. Essentially with this, you need a clear break above 60 bucks. And then you have a nice gap fill situation. But it needs to gap up. So 60.25 becomes a key pivot. A break above this with the retest gives you your upside scenario. The rejection here gives you the downside scenario, back down into 54, 52. I like this setup. Either way, you can win pretty nicely. I would wait to see how interaction goes around $60 in this area. I want to see how many buyers step in, how many sellers step in, and then you can make a judgment here. I like the setup. I'll keep it on my watch. Let's see here. ARM. There is unusual options flow on ARM. Let me pull it up right now. NVDA. NVDA is one of my least favorite to trade right now, but I will still go through it for you. I'm trying to pull up the ARM unusual options flow. I guess it's not here right now. Okay, never mind. I can't find the ARM flow right now, but I will post it on Discord when I find it. There was a lot of flow on ARM, like just a few days ago. And looks like we have some action on IWM too. So VIX as well. So okay. Just based on technicals here. Not that bad of a setup, but this is just a lot of price action that's going to be tough to deal with on the way up, right? If you have so many levels of like resistance up here, this is going to be like a war zone. You know what I mean? That's the way I like to look at charts, right? If like there's a lot of like pressure in the past price action here, then this pressure is going to show up in this area somehow, right? There will be some pressure here. So it will not be a path of least resistance. This will have, like, it might go like this, like this, like this, like this, like this, like this, you know, and it might be very rocky and stuff like that. So I like the play if instead, if it's a short position, I like the play. That means reject where it opens up today at around 126, right? Comes back down and then starts rejecting 121 as well. So that would be the ideal scenario setup for me. I don't like the long play so much because it's already in the up motion wave. But if you want to take the long play though, you can still make this a good trade, just FYI. Because you have good risk to reward ratio either way. See? You want to do the long trade, let's say you get a pullback, you take the long there, you go risk off like a bit further down, and then you can play up to around here at 144, right? But this will be a long swing trade, and I don't like that risk. The rejection play is so much sweeter because the rejection play means you enter here somewhere, right? Your risk off is here, and then you have all of this, which is about a 1:3.8 RR, which is nice. Okay. So I like the short scenario better than the long scenario. That's a nicer setup. But oh well. Okay, next up, NVIDIA. Okay, so NVIDIA. I mean, this one's had a massive wave up, right? So let's just assume that that's the end of it. A 50% retracement based on this wave would be the previous highs. Okay. So that's where I would be targeting long term, but I don't think that it's going to get there right now. I think that this will take some time to pull back. Personally, I'm going to give you some advice. Just don't trade this right now. Right? It's not very predictable. However, I will say it's about to split in this month, and that's the reason why there's a very high chance that it keeps running. Everybody who tries to short this thing is going to just blow up their account because it's pointless to short a stock that is almost bulletproof right now. Okay, Their guidance is improving, their earnings are improving, their revenue have like bamboozled, like completely obliterated their competition, right? So don't try to short a good company, right? That's the basics. Netflix. I haven't seen this in quite a while. Netflix chart. Okay, quite straightforward. Obviously, you don't want to play upside here, right? That's a shit risk reward ratio. Rejection potentially here. I don't know. It could, if it can reject here and keep rejecting, I would be down to take a short position, right? With this, I would, rather than playing the upside, which is very short, which is very like it can get sucked into this, but I would be taking on like a little bit more risk than usual. I would rather play this nasty rejection, break below this, take the short trade down, and then further down if it validates 595. That's the way I would play this one. I would favor the short position. The long position is not terrible too, by the way. The long position here is, let's say, entry around 650, no, 651, yeah, 651. Risk off at 625, and then here you have a 1:2 risk to reward ratio. That's not bad. That's okay. Short position better though. Better risk to reward ratio. Let's say you play rejection off 631. Even if you play it to here with the risk off, it's a 2.5 risk to reward ratio. So downside risk to reward ratio is better than upside. That's what I would say. Okay, last one, Mara. Now, considering that Bitcoin's breaking out a little bit, Mara's gonna be obviously a sympathy on it because they own Bitcoin. I wouldn't play this though until and unless it strongly breaks out of this $21 level. It needs to like strongly break out of it though. I wouldn't play it otherwise. Like I don't want this like sluggish breakouts. I want like a big ass candle, you know, something like powerful. Then will I be down to play this? Otherwise, not that interested. The risk to reward ratio here, I mean, it's not bad, it's not terrible, but not that great. So let's say you enter where you are, you come down here, all the way to here. It's a 1.61 risk to reward ratio. If you're playing it all the way up to where it moved to last time, it's 2.7. But that's the problem here. Is there's too much of resistance in this area. And that's why it's not my preferred choice. So I hope that's helpful for you, Carolina. If you can, on your way out, leave a like on the stream. I appreciate you guys tuning in. This happens every Monday and Wednesday. I try my best to hold them as religiously as possible. But once again, I would love, you know, your feedback and things that you may want the stream to have. We already got topics for our next webinar. So that will be happening soon. And also, if you are a OG that has been listening to this stream for a long time, I want you to reach out to me either on Discord or IG, because I got a little surprise for you. Okay. I'll see you guys back on Wednesday. Have a great trading day. And yeah, we will talk to you soon. Peace out. Bye.